personal lines field rep for the state of Ohio. Been here at Cincinnati for a little over 17 years, and I work hand in hand with our underwriting department. I'm kind of an extension of the underwriting department. I handle all the onboarding training. I handle all the prospecting, working with Brad for quite a while to get you guys on board. But I got a couple other key people that have joined the call that I do want to introduce to you guys, including Josh. Josh Mason is one of our field claims managers. They're not going to stay on the call the whole time, but did want to just let Josh take a few minutes to introduce himself and maybe talk a little bit about Cincinnati and how we handle claims. Josh?
Yeah. Hi, everybody. Josh Mason here. I'm actually local here in Pickerington, so not too far from you. Hopefully, Tyler and I, he's also on the call. He's the local claim rep assigned to assist you guys with your claims. Hopefully, we can find this time to stop in, maybe once some of the COVID stuff relaxes a little bit, if that ever happens. But I'm keeping my fingers crossed. We're approaching that someday. But yeah, we're right here. We're local. We take that, anytime you have a problem with a claim or any associate, I want to be available for you. I've been with Cincinnati for 16 years. I've been, I'm trying to think, I've been in this area for about 25 years, so very familiar with it. Really glad to be part of your team, and that's kind of that's how we handle it. That's how we look at it too, a team approach. So you have a claims question, maybe it's not a claim that's an actual claim, feel free to reach out to me. I'm here to help you out. Tyler's here to help you out. It could be, hey, we're thinking about writing this client, and they just have a question about maybe the best way to write it. I can try to help you out from a claim side. This is what I've seen. This is what I've experienced, and see how we can, because we'd much rather be on the claims question side prior to having the loss than after having the loss. So whatever we can do to help out with that, that's where we want to be. So please don't ever hesitate to reach out to me. I don't know, Scott, did anybody send out our contact information to everybody there on the team?
They're going to get it after today's training. Yep. So perfect. Your contact information will be there, Josh, and so will Tyler's.
Yeah. So it'll have. We typically all work from mobile, as is. I'm sure a lot of you guys are. So call, text, email, whatever the best method is for you guys. We're here to serve. So let us know how we can help you out, and just don't hesitate at all.
Awesome. Thank you, Josh. And Tyler is the actual claims adjuster that's going to be assigned to your agency. So he is local as well, and wanted to give him just a minute to introduce himself. Tyler, you want to provide a little intro?
Yeah, absolutely. My name's Tyler Reed. Like Josh said, I'm local. I'm in Reynoldsburg, lived in Reynoldsburg for my entire life. I've been with Cincinnati for a few years now. Kind of just very excited to be a part of your team now. Looking forward to get to know some of you as we work together. Just piggybacking off of what Josh said, please feel free to call me or text me or email me whenever a question arises. I'm certainly here to help and do what I can to be of assistance. So again, once our contact information is sent out, just feel free to reach out whatever way is most convenient for you. And I'm excited to get to work with you folks.
Awesome. Thank you, Tyler. And just Tyler, Josh, just so you guys know, we've got folks on the call from AAA that are throughout basically the whole entire state of Ohio. Oh, okay. A little bit of a unique appointment for us, that's for sure. But they are headquartered there in Worthington. So we probably have folks, if I had to guess, from all over the state. So, but yes, these are your assigned claims adjusters. Feel free to reach out to them at any point in time with any questions that you might have. I do want to save the best for last. We have Tim Bushman on the line. At Cincinnati, we do believe in a dedicated underwriting system, meaning you have one underwriter that's dedicated to your agency. Tim has a very manageable territory, so he is going to be available whenever you guys need him, right, Tim? At all hours of the night. So just wanted to give him an opportunity to introduce himself as well.
Good afternoon, everybody. As Scott said, my name is Tim Bushman. I have been with Cincinnati for 23, going on almost 24 years at this point in time. I've been a personal lines underwriter my entire career, have handled territories all over the country. The last 3+ years have been in Ohio. Most of my agencies are in the Columbus area, but I have agencies up in Cleveland and anywhere in between. I've also handled Dayton, Springfield, pretty much most ends of the state except the Toledo area. But I've got plenty of contacts of people in that area if there'd be any specific, questions about that. But I'll be honest, there probably isn't going to be too much that I haven't already seen if you've got questions about it. So hopefully we'll get this ball rolling quickly. And I'm here, maybe not 24/7 like Scott thinks I might be, but feel free to reach out to me either by phone or by email. Either one works. I tend to respond to both just as quickly as the other. So.
Awesome. Thank you, Tim. And I see James, who is Tim's manager, just joined. James is new to the territory. He's not new to underwriting by any means, but James just took over the territory underwriting duties for Greater Columbus and Cleveland. Give him a chance to introduce himself too. James?
Hi, everyone. Sorry I'm late. I'm jumping off one meeting onto another. Been with Cincinnati for almost 10 years now. Previously handled DC Metro and a variety of different states in the South. Transitioned over to managing the team about a month, maybe 2 months ago now. So looking forward to the onboarding process and quotes and just, working through new business and things like that. Obviously, Tim is your primary point person, but any questions you guys may have, you're always welcome to reach out. Accounts you'd like to discuss, readily available. Similar to Tim, phone or email, whichever works best for you is fine with me. So
awesome. If you can't tell the theme, we love relationships. We are going to make ourselves as accessible to you as we possibly can. Before I let the underwriting team and the claims team get back to their to their duties, any questions that anybody might have for Tim, James, Josh, or Tyler? Quiet group, don't be shy. Now's your chance. I'm just kidding.
I have a question. I want
Sure.
to know if Josh's room, if that's his real room or if that's a background.
That's definitely virtual. Definitely virtual.
No, we appreciate the intros, gentlemen, and really just goes to show how much Cincy puts towards the agent. So appreciate it.
Yeah. Okay. So Josh, Tyler, Tim, James, thank you guys for joining. I know you guys are going to try to join on the next session that we have with the agency. Appreciate it. Feel free to stick around if you want to. I know Tim's heard this a million times, but if you want to go through Cincinnati's products and philosophy, feel free to hang out on the call. Before I share my screen, I've got 3 monitors going, so I'm going to be able to monitor. If you guys are shy and you want to put your questions up on the chat box, that's perfectly fine. If you want to interrupt me, that's great too. I've done this probably, no joke, I would say at least 200 times over the past 5 years. And I can tell you the way they go really well is if there's a ton of dialogue and we use up the full 3 hours. So feel free to ask me anything. As Tim mentioned, there isn't anything he hasn't seen. Pretty sure I'm getting close to that too, but feel free. Let me know. Raise your hand if you want to use the raise your hand function in Teams. That works too, but I will. You're not going to hurt my feelings if you interrupt me. But I am going to share my screen now. Give me 1 second. Hey, Brad. Good to see you.
Scott, good to see you, buddy. Thanks for the time today. Appreciate it.
Oh, no problem. I've been looking forward to this. Pay no attention to the year 2021. I have not updated my slides. I apologize. So we are going to go ahead and get started. Hopefully you guys can see my screen. One last question for you. Did the slide move? Are we on slide 2? Oh man, I'm on a roll. Perfect.
Yes.
Perfect. Before I get started, does anybody have any prior experience with Cincinnati Insurance? Anybody worked at another agency, another firm, or maybe you sold Cincinnati in the past?
About 20 years ago.
20 years ago. I'm not sure. Was that Deborah?
Yes.
Yeah. So things have changed a little bit, Deborah.
I'm sure.
Yeah, we have direct bill now. So that was one of the things they were promoting in 2005 whenever I joined. Our technology has come to the forefront of the industry, which is incredible to be a part of and to see that as we've progressed. But yes, we built a gigantic book of business throughout the 50s, 60s, 70s, 80s, and 90s without ever being able to offer direct bill. So pretty funny. I like to throw that out there. But welcome back. We're going to go through our products and philosophy first, and then we're going to get into the system training today. I think Nick was kind enough to send me over a couple of accounts, so we'll quote one of those together so you guys can see how the system works. But just a little bit of a background about Cincinnati. We're all about the relationships. We talk about how we're a company founded by agents, for agents. That's something you actually see whenever you go into our headquarters, which is down in Fairfield. Believe it or not, we actually are a national carrier. We weren't that whenever I first started back in 2005, but we've expanded out into to 45 of the 50 states actively appointing agencies, and now we're number 22 as far as the top P&C carriers go in the United States. We have the financial backing to pay claims. We're financially rated strong. We're A+ rated, and it all comes down to our real salespeople, and you just met them. It's Josh and Tyler. Our local claims adjusters are dedicated to you guys. They're dedicated to both the high net worth space and the middle market customers that you place with us. Our appetite, I'm going to get into that, is like no other. I love your $250,000 homes, and I write $200 million homes. And I've got products and expertise for anything and everything in between. So we're going to go ahead. I'll share with you guys. Whenever you do get access to the system, you're going to have access to quote in all 45 of our states. Some of the states, as you can see, are going to have a little bit of more stringent underwriting guidelines and rules. Yes, we do write business in Florida. Yes, it is on a limited capacity. And yes, it is more geared towards the bigger risks that are closer to the coast that are going to be well mitigated. I'm sure you guys are going to have some of those that come through for your secondary locations. But yes, you do have access to all of the states that are blue on the map in front of you. We just actually entered into New Mexico and Maine late last year, and that's pretty much where we're going to stop actively appointing agencies. But we will have all 50 states up and running in our system very soon. It's pretty cool. Talking about our underwriting philosophy, I say this all the time. We have underwriting guidelines. We don't have underwriting rules. We do want to write packaged business. Our rates are going to reflect that. The more lines of business you place with us, typically the better the rate. That's going to be the better rate overall. We want to create that positive partnership with you guys too, especially between you guys and Tim. Tim is going to be your main contact for the agency, and the more you reach out to him, the more you guys get to know each other, the more comfortable you're going to feel with each other. The more business that you place with us, the more we're able to offer that flexibility on the underwriting side too. We do have some new business guidelines, which I'll get into for each line of business, but overall, we want to make sure that you have somebody to talk to. We want to make sure that you've got somebody that's going to pick up the phone and answer emails. And Tim's goal is to respond to you within a couple of hours or at least by the end of the day. We pride ourselves on that. Okay, before we get into the lines of business, I want to share with you guys our approach to insurance scoring. So we do run insurance scores on both of the named insureds in the system. It doesn't matter if you put the first one in the first position or the second one in the first position. We run them on both the named insureds. You're going to see this generate whether you're quoting through a comparative rater system or whether you're quoting directly in our policy issuance system, which is called Diamond. You're going to see a score return that's got a T associated with it. A T1 is the best, a T13 is the worst, and as you can guess, our premium is very competitive on the best scores and not so much on the worst. If you do get a T14, that simply means that there's either not enough information in their file to determine a score, or you've entered something incorrect. We do run the same reports on the home and the auto. The auto gets the best score, the home gets a blended score between the two. And I will tell you this. You can have an insured that has a perfect credit score, and they might not have the best insurance score. Our model does not take into consideration their credit score. It takes information from their credit file and determines a score that way. It's called Attract One. It's a model that we purchased from LexisNexis. It does a good job for us. We feel it's a good indicator of future losses, and our pricing is really going to be competitive on the better scores, especially now that we have a new company called Cincinnati Casualty. We don't rerun scores at renewal in most states, Ohio included, unless we get a written request from an insured in order for us to rerun it, and an email does count. That would be perfectly fine if you have an email. If you've got somebody with a really good score, though, I'd highly recommend that you do not rerun it, because we do have to use the most up-to-date score. That's how we're filed. All right, I'll pause here for just a second. I don't see anything in the chat box, but anybody have any questions thus far before we start talking about the home?
You mentioned that you run the score on both of the insureds. Scott, do you pick the one that's going to be the best of the two, or just the primary?
On the home, we use a blended, Michael, and on the auto, we do pick the best of the two.
Awesome, thanks.
Yeah, no, good question.
I have a quick question. This
Sure.
is Brandon. As far as the credit score, the insurance score, how's that outlook for that with some of these states that are eliminating credit scoring? Is that something that's on your radar to switch gears with in the future?
We feel it's a good indicator of risk, you know, of the predictive modeling that we have built in. There are some states that are going away from it, California being one of them. So any of the states that California has gone away from it, I think Washington was another state that came in and said that they don't want insurance companies using it either. And what's going to happen in those instances is people's rates are simply just going to go up, because everybody's going to be basically paying, you know, you're not going to have any real segmentation in your book of business, or a good way to determine, you know, the appropriate rate for that individual exposure. Believe it or not, insurance scoring to us is new in the grand scheme of things. When we first came out with it back in 2005, we only had 3 levels. And then we didn't have a level at all. You just either qualified for credits or you didn't. And then we had we developed another way of scoring where you got either a high, medium, or low score. And we wrote a lot of low scored individuals we were still being adversely selected against. But we feel very confident in our model, and it's proved really well in the state of Ohio. We had 2 record-breaking years of new business since we released our new company, and mid to upper 40s direct loss ratio too. So pretty good on about a $320 million book here in the state. All right.
As agents,
Scott, I
will
have
we
a
be able
question.
to see the tier rating?
Was that David that asked the question?
Yes.
Yes, David. So yeah, it's very transparent. I'll actually show you guys that today when we get into the system. You'll be able to see the score. You'll actually be able to pull up what's called their NCF, which is it's the national credit file overall. It gives you some indicators as to why their score is what it is too.
Quick question, Scott, on
Sure.
the on the insurance score. We've seen it with some of our other carriers where, take example for Progressive, they're with Progressive now. We run it back through our PL Rater, and Progressive's coming up with the best option out of our 9 or so companies, and we write that with Progressive. Can that be a similar case with Cincinnati, and the reason why their rate is going to be better than what they have with their current agency is because that insurance score is improved?
If you so we won't allow you to quote any business that's already with Cincinnati. In your comparative rater, you'll get a stop. And if you are quoting anybody that's already in Cincinnati inside your agency, and you're running them back through the comparative rater, it won't return a quote either.
Okay. How about, can we AOR those if they want
No.
to be with our agency? No.
We're not allowing any AORs to AAA.
Okay.
Yeah. Good question. Any other questions that you guys have? All right, so I'm going to go ahead and talk about the home. If you guys do have any questions, I love the ones that we've had thus far. Keep them coming. Give you guys just a broad overview of what we have to offer here in the state of Ohio. And this pretty much translates throughout our whole entire footprint, but most definitely resonates here in the state of Ohio. As I mentioned, we do want to write package business. We've got products for those folks that rent, products for those folks that have condos, and then today we're really going to focus on our homeowner products that we have available, including our executive homeowner policy and our executive capstone. We do have some high net worth products that are available for your condo owners and your tenant policyholders too, but I've got a condo special policy that you can use. Minimum additions and alterations on that would be about 10 grand, and then your tenant policy would be $25,000. As long as you're packaging that business, we'll write it all day long. As long as it meets our guidelines, not a problem in the least bit. You have the ability to quote all of these forms in our policy issuance system, Diamond 2. But today, what we're going to focus on are the two primary homeowner forms that we have available. Our executive policy is good for anything less than $750K, comes with a minimum $1,000 deductible. And our executive capstone policy is what we call our high valued homeowner product, and it's good in the state of Ohio at $750K and higher with a minimum $2,500 deductible. Now, one thing to keep in mind is our system is going to default that personal property limit at $75,000, and you can actually reduce that for some pretty decent premium savings down to 30% on the capstone and down to 50% on the executive if you want to match those if you're trying to match apples to apples with an incumbent carrier or anything along those lines. As I mentioned, we do have some underwriting guidelines and some requirements. We are going to run clue reports, and we are going to check for insurance to value. We do supply you guys with tools to make sure that you are getting your replacement cost values up to where we feel they should be. This year, our inflationary rate is going up on the dwelling 7%. I know some companies are taking 12. In years past, we've taken 5. We feel like 7 is where we need to be in the state. All of our risks do have to be written at 100% of the home's full replacement value, not market value. We do typically inspect basically every single piece of business that we write. Sometimes it does pass through if it meets certain criteria. But when we look at the clue report, if it does return any 2 or more losses in the last 3 years, you're going to get a flag. Anything that's under construction would generate a flag too. Unpackaged business, my rate's not going to be super competitive on that anyway. And if you've got business exposures, you can run those by Tim. If they've got an at-home business where it's very incidental, we might have a solution for you. And anybody high profile, meaning they're nationally recognized that you guys might write, we do vet them. We vet their personal file. We dig into them online quite a bit. As far as some of the other guidelines that we have, anything on the homeowner side that's been canceled or non-renewed, anything that's in a poor state of repair, vacant, under construction, unprotected. And what I mean by that is, the extreme PC9, or I'm sorry, the extreme PC10s, a normal PC9, PC10 usually isn't that big of a deal. We do have coastal guidelines for every single one of our coastal states. We do have a dog list. It's got all the dogs on it that you would think should be on it. If you do have an account that has one of those types of dogs, one of the questions the underwriter is going to ask you is if you've ever met the dog, if you know the dog personally, and if you say yes, they might ask you if you'd leave your kid alone in the room with the dog, right? So we want to make sure that you're comfortable with it before we would be able to offer that coverage. Pools, we don't surcharge for pools. We don't surcharge for trampolines. As long as you've got a fence around them, that's what we're looking at. On the trampolines, we want to make sure that they've got the safety netting and the protective padding. I've got an in-ground pool in my backyard with a diving board. My yard's fenced in. I'm insured with Cincinnati, and knock on wood, hasn't been an issue. I think the only person that's hit their head on the bottom of the pool is me. So, yeah. All right. So those are the guidelines. Pretty high level. The one thing I will say is the system is not a smart system. The underwriter does the thinking. The system does the rating, but you will get some flags in there. If you ever do get a flag and you feel like it is a good risk for Cincinnati, pick up the phone and give Tim a call or shoot him an email and let him know what you think about the risk, and reach out to him and see if you can extend that conversation and provide a little bit more narrative. We love hearing the narrative. We love hearing the relationship you have with the client. If something should be outside of our guidelines. Okay, so what you see on the screen here is just some high-level coverages of an unendorsed executive homeowner form. So if you think of this in the insurance terms, this would be a modified HO5. So it would be a form that's upgraded HO5, and this is what you get without endorsing anything to it. Good for those homes less than 750K. It's open perils for both dwelling and contents. You get additional limit built into it for debris removal, for other structures. All of our forms, the loss of use or actual loss sustained, you're going to see in the system that you can reduce that or exclude it. Don't do that unless Tim actually instructs you to do so. In the state of Ohio, we don't want to limit it. We want to make sure that the client does have that loss of use. And yes, we do keep them at their normal standard of living should they incur a claim that does make their home uninhabitable. And, PI is included. We give you full coverage for golf carts as long as they're not registered for road use. We throw in some mold coverage. You can actually increase that if you'd like. We give you $1,500 for jewelry and fur. We want you to schedule that stuff. We'll talk about that here in just a bit too. A little bit of coverage for business property. And then lastly, one of the things that you don't even have to worry about is if you have a kid that's away at school and you're insured with Cincinnati, as long as that kid's under the age of 24 and enrolled in that school or college full-time, whether they live in a dorm or an apartment, they get mom and dad, or I should just say parents, full contents and full liability limit without you having to do anything. If you need a COI, a certificate of insurance, to provide a landlord or anything like that, you can write one using mom and dad's information. Just like any, middle market product or, HO3, HO5, you want to make sure that you got some endorsements on here. Here are some of the ones that go on 100% of the policies that we write, including our Homeowner Plus endorsement. This gives you the replacement cost on contents, takes the building ordinance and law up to 100%, gives you a little bit of increase for the special limits for jewelry, fur, etc. That goes on every one of your executive homeowner forms. We handle water damage differently than any other company out there. Every company is going to offer you some sort of sublimit option for your failure or overflow of sump pump or backup of sewer or drains. At Cincinnati, we are the only company that offers hydrostatic water pressure coverage, and it's built into the endorsement for our limited water damage. So what do we mean by hydrostatic water pressure coverage? Well, essentially what it means is basement seepage. So if you have a heavy rain that saturates the ground and it seeps into the ground, and you've got water built up along the foundation and it's putting pressure on the basement walls of the foundation itself and it seeps through those cracks, we pay for that. And you choose what sublimit you want for all three of those particular coverages, and it's very affordable. Water is the second highest peril that's paid out on an annual basis, especially in Ohio. And yes, we do pay out hydrostatic pretty frequently. It makes up about 20% of our water claims here in the state. After the meeting today, I'm going to follow up with some additional information, and a piece of that is actually going to be a video that we have that illustrates hydrostatic water pressure coverage. For those of you on the sales side, I'll show you how to generate a sales proposal in the system. You can actually embed the video in the body of your email, and a lot of the agents I work with, they sell Cincinnati by going through the basement. Any questions on that coverage? All right. So we do have some additional coverages that are available. These are pretty much standard in the industry, but you can choose 125, 150, or guaranteed replacement cost if you'd like. You choose the limit that you want in the system. Identity theft expense is a $25,000 limit. I think that's $27 to add to the policy. So in some sort of fashion, all of these endorsements do get added to the executive risks that you write. For our executive capstone policyholders, if you've got a dwelling limit of $750,000 and higher, a minimum $2,500 deductible, you would be placed on the executive capstone homeowner form. Unlike the regular executive, this has a lot of the bells and whistles already built into it, just like the guaranteed replacement costs. It's got a cash out option. You can also write your secondary residences. They're going to be eligible for coverage regardless of their coverage A. If the insured wants to have the enhanced coverage that's afforded from the executive capstone, as long as the primary qualifies, the secondary would qualify as well. So here are some of the highlights that you're going to find in the form. Just like the regular executive, you do get open perils for dwelling and your contents. You get a little bit of extra coverage for your other structures. We throw in quake for your contents. It's going to be optional for your property. Talk about how we approach quake here in just a few slides too. It's got RC on contents built into it. There's no sublimit for those water coverages that we just went over. It's actually covered at policy limits. So you get backup a sump pump, backup of sewer drains, and hydrostatic water pressure coverage all the way up to your policy limits. Throw in additional coverage for some green coverage if they want to rebuild their home or replace their appliances with more energy efficient materials. Give you more coverage for identity theft built into it, business personal property, your loss assessment, mortgage expense. So if something were to happen to the home, if the bank comes calling, they need to close the loan, we'll pay the fees associated with all that up to $5,000 too. One of the nice coverages, I can say this because I don't have kids, I've got dogs. You might see them walking around in the background here, but if something were to happen to my home, my dogs damage my property, domestic pet damage is covered all the way to policy limits on the executive capstone. And I also have some expense coverage built into this too, up to $5,000 should it's basically loss of use for your dogs. If you've got your home's uninhabitable and you have to put your dogs in a kennel for a bit, we'll cover those costs and any veterinary care that might occur too. Built into Ohio is our large loss deductible. So we'll waive losses as long as they're not quake, landslide, or named storm. We'll waive your losses that are over 50, or waive your deductible on losses that are over 50K. So, the last thing you want to have to do is pay your deductible if you've got a total loss, especially if it's a large one. Before I get into some of the additional endorsements, I'll pause here for just a second. Any questions?
I do have one, Scott, regarding
Sure.
PR Rater. When we do a home quote, we typically guesstimate the replacement cost of the home.
Mm-hmm.
For the executive versus the capstone, will it automatically bridge over? Let's say we say 800,000. We think that's going to be the replacement cost. Will it automatically bridge over to the correct policy form, executive
Yes.
versus capstone?
Yep. So
So
if you're using the PL Rater and you put in anything above 750K, it'll quote it right now on the executive capstone. Anything
Okay,
less than that, it'll
automatically.
quote it on the
Now, what
executive.
if when you go in-house it's actually higher than you thought? Will it automatically in your system do that, or will you have to go back and change it on the Rater? You follow? What I'm saying is that let's say we guesstimate 650, but it's really at 825 when you go to the your system. So the question is, will it automatically upgrade that to the capstone, or will you have to go back to pure Rater?
That's a good question. When you bridge it over, if you're doing the change in PL Rater, it should change the rate and base it on the executive capstone. If you originally quoted it at under 750, and then you went back in and you requoted it above 750, it'll change the form in PL Rater. But if you quoted it at 650 and you bridged it over, and you'd have to go into Diamond at that point in time, Michael, and you'd have to increase the coverage in the system, and it will not automatically change it. You have to manually change it, which is easy to do. It's just clicking a drop down box. But yeah, that's a good question.
I just did a quote for a customer, and I guesstimated 750. On it being $1,000,004, two clients. So it's just that's the reason for the question, is that many of our carriers don't do over $500,000 or 750. So you put an amount that will allow you to get a rate from all our carriers.
Mm-hmm.
So, but sometimes when you bridge over, it's actually more than you thought.
Sure. Did you quote that one with us?
I didn't have access to your system just yet,
Okay.
so it was actually
Gotcha.
through others.
Gotcha. Yeah, that's a good question. I'm not an expert by any means with PL Raider. I know enough to get myself in trouble, but I know a little bit. And you actually, the admin at the agency is going to be able to set defaults for the quotes that you guys generate through PL Raider or whatever rating system that you use to make sure that every limit that you choose, every additional endorsement that you might want on there is automatically included too. Or if you just want an indicative quote with, the stripped down stuff too, you can go that route as well. Good questions.
I had another quick question.
Sure.
As far as the dogs, do you have a specific list of excluded dogs, or were they just?
Yeah, so the list is in the system itself.
Okay.
So the underwriting questions are going to indicate what dogs, that we want to at least have additional conversations with. You're going to see AM staff is listed on there. I've got an AM staff mix laying next to me as peacefully as she possibly can right now on her little dog bed. Her name's Blanche. She wouldn't hurt a fly, but that might not be true for other AM staffs that are out there.
Sure. Thank you.
Yeah. Good
What
question.
exactly is the 10,000 green coverage, Scott?
Yeah, so it doesn't really come into play too often in the Midwest. I jokingly call that one the hippie coverage, Michael, because what it does is it allows our clients, if there have been upgrades to appliances that are more Energy Star rated or that are more energy efficient, or building materials that might be more energy efficient, they have the ability to go above and beyond their dwelling limit or their contents limit with that supplement. They can actually increase it up to 50% of the dwelling limit if they want to. It gets costly, but they can go that route if they want to. Doesn't come into play too often, but it mirrors the high net worth space.
I have a question. Excuse me. With regards to the high value type homes,
Sure.
would there be a mandatory interior dwelling inspection, and would they be required to have an alarm system, monitored alarm system?
Great question, James. I've got a slide for that later, but I'll go ahead and cover it now. We inspect properties depending upon the dwelling limit, and if they meet certain, if there's certain trigger points that go through our algorithm. But any home $1 million and higher, as far as the coverage A goes, we are going to want to take a look at the inside and the outside. We set those up typically through a third party. If you get anything above $3 million, it's a Cincinnati associate that gets assigned to it. Her name's Tracy Niederhelman, so she handles all of the what we call ultra high net worth risks that are out there.
Okay. Alrighty.
I'll show you too in the system where you can actually input the insured's contact information to make sure that they're notified appropriately as far as those interior inspections go. That way you don't have to be the middleman at that point in time.
Right. Okay.
Yeah.
Thank you.
Scott,
good
two
stuff.
questions on loss history.
Sure.
One is if it shows a claim and there is no payout on the claim for one reason or another, do you still rate for that claim?
Great question. We don't rate for it, but we do underwrite for it. Meaning we would want to know what happened. Believe it or not, in the industry, they're called zero paid claims on clue reports. Those are huge indicators of future loss.
Another question is, what are you looking for in a 3 or 5 year period that's going to make it ineligible? So if it had like a theft claim in the last 3 years, does that automatically kick it out?
Each risk is going to be underwritten basically on its own. So there could be characteristics of the risk that come into play where we might be able to overlook some of the claims that might be on the clue report. But typically speaking, we do a 6-year look back, believe it or not, as far as our tiering goes for the scores that go on behind the scenes. But liability claims are typically an issue. Theft claims are an issue. We do by peril rating, so our losses are going to be associated with that too. So if you've had theft claims, our rate's going to be higher than if you had a wind hail claim, let's just say. Water claims, are the ones that we really dig into, Justin, and rightfully so. Having that water coverage that we have, we do underwrite water very, very, very close to the cuff. And that means if you have an insured that's purchasing a new home and there are water claims on that new home, hopefully they've been disclosed to the insured, because you're supposed to in the state of Ohio by law if you've had any claims on your property within the last 5 years. But we do surcharge for those and we underwrite them. Good questions. I did see some stuff coming through on the chat box. Yes, my dog is named after Blanche from the Golden Girls. My other dog's a boxer. Her name's Tully. She's named after an Irish whiskey called Tullamore Dew. If you've ever heard of that, it's pretty good if you've never tried it. All right. Any other questions?
What about supplemental heat wood stove? Is there a PC classification, like you will take it for an 8 or less?
It's all individually underwritten, Angel, but if you've got a primary heat source that's a wood burner, that's a no-no. But if it's a PC9, PC10, and they provide us with the photos and the questionnaire and everything's up to snuff, it's typically not an issue. I haven't had a wood burning stove question in a while. Those don't seem to be as prevalent as they once were.
I think it depends on the area, for sure.
It does. It does. I'm sure in Southeast Ohio we have a ton of them, which also happens to be literally the most profitable underwriting territory on the planet. Yeah, people down there, man, they handle their own repairs and they turn in the big stuff. That's about it. Good
Scott,
question.
I want to confirm I heard your statement about surcharges correct. If somebody had a claim in 2020, I'm buying the house now, a mortgage broker or a finance person brings me the quote, and I'm quoting the home now. You're saying that surcharge from a roof replacement in 2020 with another carrier is going to get surcharged on the Cincinnati policy?
Just water claims, David, are underwritten from the prior owner of the dwelling.
So the roof was replaced and they had water damage from the roof. You're saying that surcharge would affect the rate?
No, because the roof damage was probably caused by wind or hail.
Right.
And the ensuing water claim would not. What we're talking about in those situations are, if you've got flood claims, if you've got backup of sewer drains, you got failure of the plumbing system. Those are the water claims that we're getting into. Yeah, good question though. Good stuff. Okay, feel free to interrupt me, guys. Not a problem at all. We do have a couple of endorsements that are available for our executive capstone risks only. The first is we do have a primary flood and an excess flood solution. It is preferred, so you're not going to see us write this in high risk zones, but it does give you beefed up coverage, higher coverage than what you can get from the NFIP, including basement contents, other structures. You get some debris removal. The preferred primary flood limits do match the NFIP. And you do have the ability in the system, if you want to quote this. If you need any excess, it does have that $250K dwelling and $100K contents deductible associated with it. And you can take that all the way up to whatever limit you want, up to the coverage limit. So the excess flood does get super expensive, and rightfully so if you have a client with a multi-million-dollar home that's looking for a super high limit of excess. Additionally, I won't spend too much time on this, but we do have a Capstone Family Shield endorsement. Basically, what this does is it gives the insured some medical payments coverage should something happen to them. As you can see on the screen here, if they're victims of air, road rage, carjacking, hijacking, the one thing that's a big selling point to Cincinnati's product is our cyberbullying. So if you do have a kid that's a victim of cyberbullying, we will pay for some psychiatric services for them, up to that $100K that you see here. It's about $110 to add that to your executive capstone risks. I think in the state of Ohio, I might have 10 policies with that endorsed. I don't spend too much time on it because we've got some other great coverages that I want to talk to you guys about. We actually used to have earthquake built into our form. up until about 5 years ago, we removed it and made it available via endorsement in the system. If you want this, you simply have to just select which deductible option that you want in the system. In Ohio, we don't underwrite for it. Our rate's very competitive, in my opinion. And you can see on the screen here that you're going to have the option to buy it basically on any one of our products, whether it's for your dwelling or for your contents. And we actually offer landslide coverage. So you do have to have earthquake in order for this to kick in. And we do underwrite this. So we are going to pull up the risk to make sure that it's not written in Mount Adams. If you're familiar with Greater Cincinnati, Mount Adams is the landslide capital of the world. Columbia Parkway down there in Greater Cincinnati is constantly closed due to landslide issues. So that was actually one of the main reasons why we had to go in and revamp our stance on landslides. So this is available, subject to a 10% deductible. You do have to have earthquake endorsed in order for it to be eligible. And the next couple slides here, what I found in the industry, basically everybody is coming up with a service line endorsement. I think it's great. It's probably one of the most underpriced endorsements in the industry right now, and also one of the ones that has the broadest coverage because it does include wear and tear. It includes excavation costs, freezing, weight of vehicles, etc. So this is going to be coverage for any of your utility lines that are buried underneath your property, leading to and from your property. At Cincinnati, you choose which limit you want, anything from 10 to 25K. We don't underwrite this. Our pricing is going to be dictated on the age of the home and what limit you choose. It's a $500 deductible, and at renewal, we will not surcharge for the claims, meaning they won't have an effect on any rate. Highly recommend this. If you haven't placed it on your own account with your carrier, check and see if they've got it. It is a nice endorsement to have. Equipment breakdown. We do offer equipment breakdowns. This is going to give you coverage for your kitchen, laundry appliances, home theater, audio equipment, swimming pool equipment. It's got some additional living expense built into it. Coverage for those appliances that are kept in other structures would be covered as well. This is available for any one of your condo policyholders, your executive and your executive capstone. You choose the limit, you choose the deductible, and once again, the claims that the insured turns in would not be surchargeable against them at the renewal. All right. One of my favorites that's becoming way more prevalent than it ever was in the past is personal cyber liability. I'm seeing a lot of companies out there develop products that are wonderful, including us at Cincinnati. This is available for any one of your policyholders. It's extremely affordable. And what it basically does is it complements the identity theft expense coverage that we're providing either via endorsement or built into our capstone product. You choose what limit you want. The premiums are based upon whether you're on one of our capstone forms versus our actual non-capstone form. You're going to get coverage for cyber attack, which does include data recovery, system restoration, cyber extortion, which is becoming huge because of Bitcoin. All these cyber criminals are even smarter than what they were in the past, and whenever they do extort you for your money, they want to be paid in cryptocurrency. They don't want to be paid in US dollars. And we do include online fraud built into our form, which does include social engineering. I'm adding this to mine at my renewal. I think it's important, especially in the virtual environment that we're all basically living in and breathing in today. Just a couple more slides on the home, and then we'll talk about some of the ancillary lines of business that we have too. As far as credits go, as I mentioned whenever we first started talking this afternoon, our package credits are going to be based upon how many other lines of business you write. So I'll show you in the system. What you do is you go in and you check the boxes to make sure that you're quoting, if you're quoting an executive capstone home, on the auto, you're going to get a little bit of a better rate. If you also package it with the umbrella, you're going to get a little bit of a better rate too. And it really depends upon the overall premiums as far as the other ancillary lines of business as well, like the inland marine and the umbrella. You might get a credit for those too. We do have geocoding built into our system. So if you've got a newer home, you're going to be able to get a little bit of a better rate. We do base our rate off of roof age, and we do have an approach that's just affects our executive business or a middle market product on new business. If you quote a new risk and the roof is over 15 years old, instead of ACV, what we use is a roof payment schedule. So you'll see that in the system too. Once again, that's only on new business. It's only on stuff you quote on the executive form, and it's only on those roofs that are over 15 years old. So you write an account today and the roof is 10 years old, and 5 years from now, that roof loss payment will still be replacement cost. So it's only on new business. If the insured replaces their roof, right, and the roof, when you originally wrote the policy, was over 15 years old, you can endorse the policy to get that roof age credit, or we go out to inspect it after a claim and we know the roof's been replaced, we'll actually backdate the policy so the insured gets the credit too. So keep that in mind. There's language built into that to make sure that we're doing the right thing. We do have an affinity discount for our Ohio Dental Association members, so you'll see that in the system. If you don't have a mortgagee and you pay your bill annually, you'll get a little bit of a credit for that. And we do want you quoting at least 7 or more days before the effective date of the policy to get that new business advance quote credit. And then additionally, we have a ton of protective feature credits that are available in the system. A lot of these are going to be geared towards larger homes, but some of them, like central station alarm, backup generator, and then automatic water shutoff, could kick in too. And then as far as our surcharges go, we do differentiate by claim type and where the claim occurred, meaning if you do have a water claim on a new piece of business or on a new purchase, we are going to look at that. Now, if we dig into that water claim and what we find is the prior owner's kids stuffed a bunch of stuffed animals down the toilet and flooded the home, and we know that is what happened, talk to Tim and he'll override the claim for you. What we're more interested in is, was it a backup or sewer drains? Is something wrong with the sump pump? Is there a frozen pipe issue? That's what we're worried about. We're worried about the failure of the plumbing system of the home more so than something that's caused by user error. We do have legal notices for late pays and non-sufficient funds. We have surcharges for those, but on the home and the auto. Comes more into play on the auto than it does the home. I think Angel brought up a question about wood burning stoves. As long as it's not the primary heat source, as long as we get a photo and the questionnaire filled out, those are good to go. I remember I used to manage the state of Tennessee, and I had somebody send me in a photo of a wood burning stove, and on top of the wood burning stove was a stack of phone books, telephone number books. Probably not the best thing in the world to have on some combustible material on top of a wood burner. Was one we did have to take action on. We have a vacancy surcharge. We've got a renovation and course of construction surcharge too, but we are open to writing that business. You can actually quote this in our system. As long as it's a new build, it's under $2 million. You might not like our rate, but it is not a fully earned premium. Once the home is complete, then we take off the surcharge and they're back to the normal rate. So that is one of the sales advantages that we have over some of those companies that might be at that fully earned premium. All right, last homeowner slide, and I'll open it back up again to questions. I think James might have mentioned this earlier, but talking about homeowner inspections, as I mentioned, we will go out and basically inspect every single piece of new business we write. We really start looking at them on the inside whenever they are $1 million and higher. You will be notified in the system if we are going to go out and inspect. And if we are going to do an exterior inspection, we'll give the insured a courtesy call, letting them know we're out there or we're going to be out there. They'll just leave a voicemail. They won't wait for the insured to call them back, just FYI. And you do have other dedicated associates at Cincinnati to help you. You have a dedicated risk management specialist. It'll either be Emilio DiLeonardo or Carly Hill. They can help you. I think Michael brought up guesstimating on some of the reconstruction, the ITV. This is what these folks eat, breathe, and live every day. They can help you, and you're going to have access to them as well. All right. Any questions?
I had one. What are some of the most competitive areas in Ohio and maybe not competitive, just geographically speaking?
That's a great question. So the way I look at it is prior to 2020, we used to have what was called the Cincinnati Insurance Company as our only company for writing personal lines business in the state of Ohio. And what we really wanted to do was come up with a new company where we could kind of have a little bit of a fresh start for new business, not really negatively affect our renewal book of business. So we came up with the Cincinnati Casualty Company. And if you look at the areas where we really saw a ton of great growth, it was basically everywhere except, let's say, Dayton and Cincinnati. So Cleveland, Columbus, all of your county seat areas, meaning your non-major metropolitan areas. Where I would really love to see some growth, Butler County. I think there's a ton of growth around here. I live in Liberty Township, which is in Butler County. I don't think we have the market share up here that we should. It's about 3.5%. Good question, though.
Gotcha. Thank you.
Yeah.
I have
Any
a
other-
question concerning
Sure.
the inspections.
Okay.
So let's say they go out and they do an inspection and they notice some areas of concern. Will you give them a certain amount of time to fix it, or would you just like flat cancel the policy?
Every one of those is going to be handled by Tim. So it's going to really depend upon what kind of issue they find. To be honest with you, Carrie, it hasn't been that big of an issue as of late. We did go through years ago and we re-inspected our entire book of business and got rid of a ton of stuff that we shouldn't have been on. But as far as condition goes, I would do your due diligence ahead of time, but you're right. There could be something that just happened to the insured's home, or maybe one of the downspouts is disconnected. If it's something like that, Tim's going to work with you within that underwriting window to make sure that you get it taken care of. But if there's anything egregious, it pretty much is black and white as far as canceling within that 30-day underwriting window.
Okay. And do you guys also do flat roofs?
It really depends on some of the older homes, especially the stuff that's like downtown Hamilton. There's a lot of older roofs that I know we write the coverage on some of those historic homes.
Okay.
As long as they're in good condition.
Okay. Thank you.
Scott, we're going back to home claims. Years ago, when we wrote AAA homes, the HO5, they did not surcharge for catastrophic loss. Let's say a roof replacement or whatever. Do you guys surcharge for catastrophic losses?
Yeah, we
the
do,
same?
Michael. So we used to have that same approach, and the only way to get the profitability under wraps for the homeowner line, because of the increase in cat activity that we're seeing, we take all of it. Basically, any type of loss is considered in our rating algorithm. Now, do we surcharge for one claim? No, they just don't get the best credit that they possibly could. But in a way, in a roundabout way, it basically is a surcharge.
Thanks, that's good.
Yeah, no problem. We used to not. You could have 8 cat claims at Cincinnati, and your rate would be the same. Yeah, not the case anymore. All right. Any other questions? Cool. So as I mentioned earlier at Cincinnati, and feel free if you need to take a break, take a break. Don't feel like you have to sit on here for 3 hours. If you miss anything, we can follow up with you, or if you have any questions at the end, that's fine too. The home is the biggest section. We're already halfway through my presentation. I like to spend a ton of time on the home because there's a lot of really great things to talk about, but I do want to spend some time talking to you guys about some of the ancillary lines of business that we have to offer. Somebody, I think I got muted. Okay. Can you guys hear me okay? James, can you hear me?
It just froze, Scott. You're back. It's good.
Am I back? Okay, cool. Yeah, call that out if it happens.
Can hear you.
Something just popped up on my screen and told me I was muted. So want to make sure. So with our personal articles coverage forms, we do have two options that are available for you guys. You can actually attach this to the home if you want to, as long as it's jewelry, silverware, firearms, fine arts. You can attach that type of stuff to the home. I recommend that you just write it on its own in case the insured sells their home. That way you don't have to rewrite the jewelry as well. It's the same rate, it's the same commission level. But if you do want to beef up the coverage, we do have a capstone version of our personal articles coverage. It's available to anybody. You don't have to be on our capstone homeowner form in order to qualify for it. It does give you a little bit of extra coverage for total loss settlement up to 150%. You do get, it's the same window for newly acquired items, but there's inflationary increases built into jewelry, especially in today's world where gold is just increasing on a regular basis. So the rate difference between Capstone and Cincinnati Valuable Articles policy is roughly 3 to 5%. So not much of a rate difference, but some pretty decent sized coverage limits that are available too, including a beefed up limit for your blanket per item limits. The regular Valuable Articles form gives you the traditional 5K versus 50K for the Capstone. And you also have some built in, especially for those high net worth individuals, some jewelry and some fine arts, the works in progress. One of the questions that I'm always asked is, what kind of appraisals are you guys looking for? Highly recommend, regardless of what you see on the screen here, that you get as much documentation as you can. It'll help your client out at the time of loss, but you won't hear from Tim until it hits one of these thresholds that you see on your screen. As you can see, we've got differentiation between high net worth and middle market. We've also, as far as credits go, we offer several credits, package credits. If it's kept in a bank vault, we'll give you a credit. If they've got a home safe, we'll give you a credit. If they have a burglary alarm, we'll give you a credit. And if you do have a gigantic schedule, we will actually give you, we can talk about that. We can talk about some special rates and conditions, maybe opening up the newly acquired fine art window if we need to. If you got anything on loan, exhibition, loose stones, anything over $100,000 or total schedules over $250,000, you'll get a flag in the system, which just means you need to reach out to Tim and have that discussion.
Scott had a customer that has musical instruments, about 60,000 musical instruments. Some of them were used for professional use. She is in an orchestra, so I wonder if those would be covered the same as other instruments in the home. Or do you not allow for instruments used professionally?
There's a rate in there for that, Michael. You can write that. It's not a problem.
Okay. Some companies actually don't allow that.
Yeah, it will actually allow you, if you have an insured that's got a piece of fine art and they loan it to a museum, we more often than not will be able to accommodate that too.
Okay. So I use a musical instrument like a tuba, a trombone, a trumpet. That's what I'm talking about, basically.
Sure. Yeah. No, that's not an issue. She plays in an orchestra, symphony, something along those lines.
Yep.
Yeah. As long as the rest of the account looks good, that's typically not a problem.
Cool. Great. Thanks.
Yeah. And one thing to be said, if you've got something that's collectible, talk to us about it. I collect retro video games. I have a ton of them. I have a schedule at Cincinnati because of how valuable the market on those has increased substantially over the past 5 years. I got to looking at it a few months ago, and I have a schedule right now with Cincinnati for that. We've got plenty of people with bourbon collections, wine collections, purses. Had a guy that collected vintage suits before. And what you do with a vintage suit? Maybe look at it. I don't know, but yeah, where there's a rate, there's a way, right?
You're speaking Mike's language now.
Mike,
That's
are you
right.
into vintage suits, Michael?
I may have to insure my closet. I don't know.
I like it. That's awesome. One of the other things that we do really well, and this is niche, but it might come up, so I want to make sure that I spend just 1 second on it. If you have an insured that has a gigantic car collection, meaning exotics, they've got antiques, classic cars, motorcycles, we will treat those if the collection value is over 500K, they're not the primary driver. I've got a way to really treat those basically like fine art. Very competitive rate. The physical damage coverage is included or going to be covered by the Capstone Collector Auto endorsement that we can put on here. If they need liability coverage, we can add them to the auto as well. And we only charge the auto liability, I think, on the first 3. So if you have anything like this, work with Tim. He's very well versed in it as well. And I'll get into another program that we have for somebody that might not have a ton of collector cars. My dad's one of those individuals. Watercraft, great time to be coming to Cincinnati or getting a Cincinnati contract. This was the last missing piece of the puzzle as far as coverage and appetite goes and expertise. If you've got a boat, we want to look at it. We've got very competitive rates. We're looking to write anywhere from your roundabout or your runabout boat all the way up to your mega yacht, and we've got coverage to handle anything and everything in between. We don't really do cigarette boats, anything made by the insured, let's say, and we will do jet skis and sea-doos as long as they make sense.
Do those go on their separate policy? And same with the, inland marine, or is that just right on the home owners?
So with the inland marine, you can actually endorse the jewelry, the fine arts, the firearms, and the silverware, and the fur right on the home if you want. Watercraft is its own standalone policy, and inland marine can be its own standalone policy too. Good question. So last watercraft slide here, just to let you guys know what we're just the terminology that we use. We've cut our watercraft policy. It's good for anything less than 20 feet. The loss settlement's going to default to agreed value, meaning there's no depreciation. So just the deductible would be what they paid. So whatever the boat's worth is what they get, and that's how the rate's determined. There's an ACV option in there too. Keep that in mind. If you got an individual with a larger vessel, we've got our Capstone Yacht product and our Capstone Oceana product as well. Let us know. We've got an expert on hand. His name's Russ Steinman. I wrote my watercraft premium in the state of Ohio increased by about 30% last year. So very competitively priced. And as far as the coverage goes, I love that agreed value loss settlement. So we're going to talk we got one slide here on investment and rental properties. I will write these. The one question I'm always asked is how many will you write? The answer is 5, up to 5. If they're incidental, meaning they're not the insured's primary occupation, we've got multiple ways of insuring these. Most of these are going to be placed on the PDP3. This is our only ISO product that we have. Everything else is Cincinnati paper. These underwritten like a home. We do take a look at the roof. Want to make sure that it's newer. Anything over 15 years, it is an ACV loss settlement. Minimum $1,000 deductible. No hydrostatic water pressure offered here, but we do offer water backup and sump pump overflow. All right. Any questions before we jump into the auto and wrap everything up with the umbrella?
Sorry, I was asking questions.
Oh, you're good. Yeah, I'd rather answer
I write
questions.
a lot of dwelling, and my experience is that some company will not write properties that are in a corporation like an LLC name or rental properties. Will only write individual name. Does Cincinnati write both individual and LLC title properties?
That's a good question, Michael. So this even comes into play on the homeowner side of things quite often, especially with individuals that might have their homes deeded to trusts, right? Or maybe they've purchased their home in the name of an LLC. It's underwritten situationally, but we provide underneath the home. You don't have to even list the trust. They're going to have the coverage that they need that needs to be afforded to them as a trust. Whenever you get into ownership on investment properties and you're dealing with an LLC, we're really going to look at how and why that LLC was formed. If it was formed because this is no longer an incidental thing that the insured's doing, then chances are it's more of a commercial lines type of risk. But if the insured just did it to literally limit their liability, they're the only member of it, or maybe they're them and their wife, or maybe another family member, and they still only have less than 5 of them, you can list that entity as the policy holder. There's a way to do that in the system. Yep.
How about Airbnb risk on that, short-term rentals?
We don't have a solution for you on the short-term rentals. And I know it's going to come up. We won't write rideshare either. Possibly.
Scott,
go ahead.
Sorry, go ahead.
Oh no, I was going to say we possibly have a solution down the road as far as Airbnb goes, but probably not till 2023, if I had to guess, in the state of Ohio.
So you mentioned earlier on multiple pieces of business is going to get them the best rates. If we have a customer that maybe has a boat or a secondary home or investment home in another state, we're not able to write that policy. How can we handle those types of customers so they're getting those discounts?
So you're only allowed to write Ohio?
Correct. So
Okay.
if we have a customer that has a second home in Florida and they want to keep all their coverage in with Cincinnati, how can we go about writing that business that's outside of Ohio?
I think you'd have to work hand in hand with another Cincinnati agent in order for that to work. It's a good question. It's a unique situation with you guys. I totally slipped my mind that, you know, your marketing territory is essentially 86 counties in the state of Ohio. So
we just have to find an agent or agency that's in that territory that we can work with?
Not necessarily in that territory, but an agency that you'd be comfortable working with. I mean, I know we've got some agents that might not be licensed in Florida, right? And another one of their friends is, so maybe that agent has the Florida piece and the other agent has all of the primary. I guess each one of those is going to be situational because the agent might not be comfortable just having a secondary location on their books of business too, Justin, because typically secondaries are a little bit more unprofitable than primaries. It's a good question though. It is. I'd have to think about that and see, you know, maybe talk to Brad and see if there's some kind of solution for it. Any other questions, guys? Oh, all right. Well, if so, feel free to interrupt. Once again, not a problem. Going to talk about the auto now, and then we're going to wrap things up with the umbrella. And just so you guys know, our auto policy and the way we're set up in the system is extremely, extremely user-friendly. It's going to default to an annual policy. You can put as many vehicles on there as you want. And if it's got wheels and we're willing to write it, it goes on our auto policy. So that means pickups, private passenger cars, vans, motorcycles, motorhomes, ATVs. If you got a golf cart that's registered for road use, you can throw that on there too. It's very easy and makes your life a lot easier as well whenever it comes to the ease of doing business. We do have some guidelines that we're going to implement. As you can guess, we don't want to write anything that's got a major conviction. If there are 2 or more losses or violations in the last 3 years, you're going to get a flag. If you got a family of 5 and there's 2 speeds, one on one person, one on the other, you're going to get a flag. Does that mean that's a bad piece of business? Not at all. It just means that you got to call Tim because we have the same underwriting rules for a 1-driver policy as we do for a policy that's got 10 vehicle operators. We don't do SR22s, and we do run prior insurance reports, so they do have to have prior coverage in order for them to qualify with Cincinnati. And if you do have a student or a kid that's spinning off of their parents' policy, mom and dad's insurance does count as prior. Just please note that. And we do not do excluded drivers right off the get-go. That's something that's reserved as an exception and only on a renewal basis on an account that's got tenure built up into it.
How competitive are you with youthful drivers?
How competitive are we with youthful drivers? If you have
asking for a friend.
I hate this question, Heather. If you have, I'm always going to be honest with you guys. We do front load our rates with youthfuls. And what I mean by that is some companies, if you've got a youthful driver that's turning 16, they're not going to charge a lot of premium off the bat until they have their first accident. And we get our pound of flesh from the get-go. Do we write accounts with youthful drivers? Every day. We're really competitive on the ones that are clean, obviously, with good student and a mom and dad or their parents, I should say, have a good insurance score. But yes, I see some of the transactions that come through, and the days of us being underpriced on youthfuls are behind us.
Okay, thank you.
Yeah, no problem. I don't want to discourage you from quoting them because we're writing them all day long. It's just if there are a lot of other factors that could negatively affect the rate throughout the whole algorithm that it goes through in the system. So occupational risks, if they are delivering food right now, we do provide, because there's a lot of ambiguity in our policy, so we theoretically do provide coverage for those that deliver food. We always underwrote it in the past, and we're not doing that right now due to the pandemic. People have to make ends meet, and that might change here soon. We don't do taxi services like Uber or Lyft, so please note there are some gaps in most standard contracts that could come into play. And then there are some vehicle risks out there like kit cars or anything modified or equipped for racing. We're not really going to be a market for that, but haven't been approached with one of those in quite some time. So just like I did with the executive homeowner form, this is an unendorsed auto policy at Cincinnati. You're going to see some great things on here, but just like any auto policy, there's some additional coverages that we'll go through over on the next slide as well. So with Cincinnati, we treat rental cars and the coverage for liability and physical damage a little differently than our competition. As long as you're not in Illinois, Virginia, or North Carolina, I should probably throw North Carolina on there too. When you go up to the Hertz rental car counter or the Enterprise rental car counter, you don't have to purchase that physical damage waiver because you don't have a deductible. With us, we pay for this out of Part A. So you literally have your property damage limit, and that could go up into your umbrella limit too, because your umbrella limit would drop down as well. This gives you coverage for loss of use of that rental vehicle and diminution of value for that rental vehicle too. My wife and I rent cars all the time, and we love it. I love having Cincinnati, and I love whenever I travel and not having to pay that extra $30 a day to avoid any type of out-of-pocket expense. MedPay, you can turn in claims within 3 years of the accident date. Give you a little bit of coverage for BI that results in death, and we still have ISO language built into our policy for transportation expense. I'm going to talk about some solutions for that on the next screen. One of the things I love about Cincinnati too is we will waive the deductible in 2 instances without any endorsements being on the policy. That's if you hit another Cincinnati insured, or if we're attempting to subrogate against an at-fault party and you don't have UMPD. We'll go ahead and we'll waive the deductible in that situation. That way you don't have any out-of-pocket expense. So just like I did before with the executive form, these are some endorsements. So this is a coverage comparison of what you get. And you're going to notice that you see the word capstone yet again. And please note, you can add this to any auto policy. They don't have to be on the capstone homeowner form to qualify. So you can kind of see the differences between the 3 coverages that we have here: our capstone auto endorsement, our personal auto plus, and then our replacement cost plus as well. The one thing I will say, if you have an insured who's interested in new vehicle replacement, right, write them on the capstone auto endorsement. That replacement cost plus endorsement is available in the system. It is vehicle specific. It is extremely expensive, and it's limited in scope as far as the coverage goes. The premium's about 15% of the comp and 15% of the collision premium. By the time you add that coverage to that one single vehicle, you could have added a ton of additional coverages to the whole policy by selecting the capstone auto. So big takeaway, don't use the replacement cost plus. Use either the personal auto plus or the capstone auto endorsement. Those are my recommendations. Right now, I'm highly promoting the capstone auto endorsement simply due to the fact that the transportation expense is one gigantic bucket of money. So you have up to $15K, right? There's no per day limit, and the total is just $15,000. With the repair times that are taking place, it's nice to know that you got that added extra buffer in there. We do have agreed value as a loss settlement option on capstone auto. You don't have to use it. The rate is more expensive typically if you do. It's got new vehicle replacement built into it. The transportation expense I just went over, roadside assistance, as you can see, the Personal Auto Plus has lower limits. It's a little bit less expensive. Full glass coverage, lock replacement. We're going to double the med payments if you're wearing your seatbelt. We waive the deductible if it's a total loss on the Capstone Auto, and gap coverage is built into it too. The premium for Capstone Auto is really dictated on, how many vehicles you choose for that agreed value loss settlement, or if you choose to not use it at all. Personal Auto Plus is roughly, I think, $75 for 2 vehicles. It really can pay for itself pretty quickly as well. We've got some additional coverages that are available too. Gaps available where you can do extended non-owned and named non-owner policies for you. If you have an individual that's got a couple of collector cars, we have our exhibition auto program. This competes very well with the Haggertys of the world. My dad's insured with Cincinnati. He's got a couple of these at his house. Gives you agreed value loss settlement. We would ask for appraisals on these cars for anything over $50K. And then if you do quote motorcycles with us, just make sure that you guys are using that layup credit. We understand in the state of Ohio, you're not going to ride your bike the whole year. I guarantee tomorrow here where it's going to be 61 degrees, I see my neighbor who's insured with Cincinnati pull his out of the garage, because that's what you do when it's 61 degrees in February, is you get your motorcycle out. It's fine. He's covered. There's a sunny day clause built into it, and my rate's going to be way more competitive when you use that layup credit. Some of the auto credits that we have available, package credit, as I mentioned, is going to work just the same way it did with on the home. I do have an interagency discount that's available. So if you're remarketing an account from one of your current carriers to Cincinnati and it qualifies, meaning it's got a good insurance score and there's minimum claims activity or MVR activity, this box will be highlighted in the system. Gives you a little bit of additional break on the premium. So you'll see that in the system too. If you start to see that, there's issues with that, please bring them to my attention. Sometimes carriers have different, they've got different companies that they ride out of, and one of those might not be in our algorithm. So if you see that, let me know. We do run a prior carrier report, as I mentioned. I got a vacation use discount. So if the insured's got a Florida vehicle or a vehicle out of state, we can talk about applying a vacation use discount to their auto up here in Ohio. The violation-free new vehicle safety features, and multi-car, those are all automatically going to apply based upon what you enter into the system. And the VIN, as far as the new vehicle and vehicle safety features go. I know a lot of folks out there, they want that monthly EFT payment plan. It's great. It's convenient. There's no credit associated with that at Cincinnati if you choose that payment option. If you go to quarterly, you get a 6% credit. And if you go to semi-annual or annual, it's a 13% credit. They're the same. So it's huge. And I'll show you in the system where you can actually you can see the differences between the payment plans without having to go in and manually toggle between them. New business advanced quote credit works the same way as it does on the home, as long as you're quoting more than 7 days out. And then we do have RideWell, which is our telematics. It's our app-based, user-based insurance. They can sign up for this if they want to. Take-up rate hasn't been that splendid in the state of Ohio. I'm signed up for this. I think it's fine. It's pretty transparent. Tells you, how you're doing as far as your driving history goes, and I'm hoping to save a little bit of money on my wife and I on our premium. But it's a third-party app that generates driving scores. There's no cost to you or for the policyholder to sign up. All you do is you literally are going to check a box in the system. They get a sign-up credit as long as they sign up, start using the app within 90 days of the of signing up, and they have the app running for 90 days, they could qualify for a safe driver credit at their next renewal. It does take a look at how hard they brake. Are they speeding? How fast they're accelerating? Are they picking up their phone during trips? And how hard they turn. So drivers with those favorable scores do get a discount on their auto policy at the upcoming renewal that stays on for the lifetime. And you can save, as I mentioned. There's 2 ways. You do get that sign up credit. And I think, Heather, you were the one that mentioned the youthful drivers. This is a very good way, if you got a family that are safe drivers, to save them some premium. If you have everybody that signs up and everybody's in the top 20% as far as drivers go, it's an 18% credit roughly, because we don't discount the other than collision premiums, but it's a pretty decent credit that can help save the insured some money, especially if they have those youthful drivers.
Thank you.
Yeah. Any auto questions?
What's the time period for that usage base?
As long as we're able to monitor their driving, Justin, for 90 days.
90.
Yeah. If they're happy with their score after 90 days, they can just shut the app down. And it'll the score, if they qualify, will reflect on the upcoming renewal, on their next renewal.
And the rate can't go down because of it?
No, we don't surcharge either.
I should say go up and not down, but you know what I meant.
I know what you meant. Yeah, that's one of the questions we get pretty typically. And I have been told by our product management team that there are no plans ever to surcharge any type of data that's driven from telematics and RideWell. However, if we do see let's say a 16-year-old kid driving down I-71 going 120 miles per hour, we'll notify you, and hopefully you can find another home for that driver driving 120 miles an hour.
I got a couple other questions here.
Sure.
One from another agent as Mike's not working, but how do you handle out-of-state driver's licenses? Do you require in-state?
As long as the vehicle is registered here in Ohio, we're going to be able to run reports. You indicate in the system where the insured's licensed to drive.
Okay. And how about adults living at home? So say you have a 23-year-old that lives at home with his parents and that his vehicle is registered in his name. Can he still be on the parents' policy, or do you want him to have his own policy?
Honestly, if I were you, I'd quote it both ways. Chances are he's going to probably be better off rate-wise being on mom and dad's. If you do quote him on his own with Cincinnati, obviously the limits need to match. If he owns the vehicle and you're leaving him on mom and dad's policy, you can list him as the title holder. And if there is a claim, the claim check will be written to both him and mom and dad, so make sure they're comfortable with that. But he would reap the benefits of the multi-car credit. And obviously, if mom and dad have a better insurance score, he'd reap the benefits of that too. Now, if mom and dad have a bad insurance score and he has a good one, you might want to quote him on his own separate policy.
And if he has his own policy, does he need to be listed and excluded on his parents?
No, not at all.
No. Okay.
If he's with another company and he's living at home, as long as his limits match, and I mean all limits, the BI, the PD, and the UM, that's typically fine. He would still have coverage underneath the homeowner form, because we do have a very broad definition of family member whenever it comes to our auto policy. And all of our vehicles still have permissive use. We prefer that he's insured with Cincinnati. And if we need to run reports, we might require you to provide an MVR or his information for us to run reports. But for the most parts, as long as everything's on the up and up, it's not really that big of a deal.
Because most of our other carriers are pretty sticky about knowing about other drivers in the household and making sure they're listed and either rated or excluded.
That's our preference too. And it hasn't really been that big of an issue as of late. I've been burned before, and the insurer or the agent didn't know that one of the adult children had moved back in, and the adult children did not carry UIM coverage on their underlying auto, just liability. That was it. And we came into play on a claim that got up into the umbrella.
And then one other question, Scott, on so a carrier that doesn't report the prior insurance, I'm sure we're going to get into the systems a little bit, but is there a way to manually add that in and then we just send the proof of prior to underwriting? Because we get some members moving from California, and the club out there, they don't report the prior insurance. And then there's a handful of other carriers, as you may know, that don't report. So Is there a way just to manually put it in and then it flags it for us to send in proof of prior?
Great question. Hasn't been an issue, but yeah, there's a way for you guys to go in and manually enter it. If you don't have the way to manually enter it, Tim would, your underwriter.
Okay.
And if you've got somebody that's part of your club in California moving to Ohio, I don't think Tim's going to make you jump through the hoops of providing documentation for the prior carrier. I think he'd take your word for it, Justin.
All right. Most of that, like, same thing. We're used to other carriers requiring us to send proof of prior. We send them a current deck page. Well, that fulfills the bodily injury, but then they need either all the deck pages or a letter of experience to show continuous months.
That sounds like an ease of doing business problem to me.
It is.
Making a mountain out of a molehill.
Yeah.
Yeah. I don't foresee Tim acting in that manner in the least, but I think he's got, I think he has way more things to worry about than, prior carrier information.
So I had a quick question going back to the telematics or whatever.
Sure.
The way you said that made me think. You said if they're happy with their score at 90 days, they can turn the app off. Does that mean at 90 days, if they're not happy, they can continue trying to get a better score up to renewal, or how's that work?
If they're horrible drivers for the whole year, Brandon, and they want to keep trying, they don't have to ever turn the app off. They can keep going until they're happy with their score.
That's good news for Justin. Yeah.
I like it. All right. If you guys have more, just let me know. So we're going to wrap things up with the umbrella, and not just a couple slides here to go. Umbrella policies at Cincinnati are extremely affordable, number one. Number two, this is one of the most important coverages that anybody can have. I am a big proponent of the umbrella. There's no retention with us, meaning there's no deductible. We mark it up to $50 million. We've got first dollar coverage that's going to drop down and give you coverage for if you've got a situation where you're renting a reception hall or anything like that. This is going to give you that property damage, that physical damage coverage that you're going to need. Liquor liability is going to be built into it too. You get worldwide coverage for non-owned auto as well. So if you're renting cars outside the country, you'd have coverage with your umbrella. If you're going to a country that might be a little underdeveloped, I highly recommend that you do still purchase the insurance that would be afforded to you via the rental car company, because sometimes those countries might not recognize our umbrella policy as being viable. If you're going to Europe, you're generally okay. I rented a car in Ireland back in 2008, drove it throughout the entire 2014. Use my umbrella policy over there as proof of coverage. We offer excess in every state, basically. Some states don't allow it, but we do offer that up to the liability limit up to $10 million. I think somebody, I can't tell who, Damien, do you have a question? Yeah, so if you're going to have access to all of that. It's going to download into your agency management system or upload into your agency management system, and everything with us is real time too. So our system is internet based. It's not Citrix based or anything like that. So if you need any kind of billing information, you're going to have it right at your fingertips.
Okay.
All right, I think most everybody's back. I'm not 100% sure, but it is 3:45. Want to be cognizant of your time. So going to go ahead and start in more of the behind the scenes with the system. But first, if you haven't received it yet, you should be receiving your login for Cincinnati. When you do receive it, you're going to log in by visiting cinfin.com. You're going to go over to the agent login over here. I got a little fake login that I use. Click the login button, and what's going to happen is it's going to load the agency portal for us. Now here you have everything at your fingertips as far as how to navigate with Cincinnati, including getting into the system, which I'll get into here in just a second. But if you click up here on one of these tabs at the top, you click on personal, it's going to bring up a ton of information about personal lines. If you haven't yet, I highly recommend that you click on Agent Monthly, and at the bottom of the PDF that it generates, or not PDF, the online PDF that it generates, there's a way for you to subscribe to it. What it is it's a circular that we generate once a month. It talks about everything going on in personal lines. It's really high level. We don't bombard you with a ton of information, but there's some good information that can be found in there. There's also some information right here for online bill pay instructions, and over on the right hand side, you guys are going to have access to all of our forms, all of our applications, all of our marketing materials. We've got a policyholder service provider list. So if you need somebody that might need some help with water mitigation, maybe they need an automatic water shutoff installed, we've got some contacts that you can find in there as well. What we're going to focus our time on today outside the agency portal system, if you were to click on this personal lines processing button, it would generate what we call Diamond. So Diamond is our policy issuance system. As I was telling Justin, it is real time. So if you get stuck in it, all you have to do is pick up the phone and call somebody, and they'll be able to pick up right where you are, or right where you left off. And because it's real time, you don't have to wait a day for anything to upload or anything along those lines. You also, whenever you issue a policy, if you have it set up on headquarter print or paperless, everything's going to be mailed to the insured on your behalf. There's nothing that you have to do. If you do want a copy of the deck page right then and there, or you want to save information about the billing, all you have to do is generate the PDF in the system. It's pretty easy to do. A couple things to point out here. Here are your contacts, your PL services, anything related to the system. Give them a call. They'll be able to help you out. If you have billing questions, you actually have a dedicated billing analyst that's dedicated to your agency that handles the territory in the greater Columbus area. Customer support. If you get kicked out of the system and you're having trouble getting back in, these are the folks that you would call. And just for convenience purposes, here's our 1-877 number for claims. Over here on the right-hand side, there's a couple things to be mindful of. When you do get your login, please sign up for e-alerts for the state of Ohio. This will keep you up to date on everything going on in the state of Ohio, including any product changes, any updates to our rate, any new products, etc. You'll get an automatic you get emailed automatically for the state of Ohio. Pretty easy to sign up. So this is the home page for Diamond. So any news that we have going on, it scrolls through. Over here on the right hand side, these are the function buttons at the top. Down here are some resources to be mindful of. Diamond's going through a little bit of a facelift right now as far as how it looks. The functionality is incredible, but we are trying to make it look a little bit more like it's from 2022 and not 1999. I'll be the first to admit that. But down here with the resources, when you have a minute, click on PL training. This will take you to our personal lines training page. Depending upon your role at the agency, there's a nice curriculum for training paths down here. If you're an account manager, you're a producer that does their own quoting, you're a producer that might not do their own quoting. Click on these. Lots of good information that can be found in here. Down here are some of the online training sessions that we have that are coming up. If you do want some more Diamond training, we've got another one coming up in 2 days that you would be able to register and attend. One of my teammates, Stephanie or Nate, take care of those. We do those once a month. We've got an online PL agent school. These fill up very quickly. This one says register over here, but I can tell you it's already full. It fills up literally the day that we announce it, because they are very well attended, and you get some continuing education credits with those. But right now, what we're going to do with for the next several minutes is go in and generate a quote. Before I do that, any questions over the system or the portal? All right, just an excuse for me to grab a drink of water. So Nick was nice enough to send me over an account to quote with you all today. So I'm going to go ahead and get this entered into the system. Before I do that, let me pull it up real quick. Give me 1 second.
Quick question, Scott. What will
Sure.
it look like whenever, so we quote it in PL Rater, that's how the majority of our, we're going to start, and then we click on Cincinnati, and then where does it take us? Does it just
Takes you
bring
here.
us right there? Okay.
Yeah, it takes you to the quote. It'll link directly to either the client screen or the if you quote like an auto, it'll take you right to the auto.
Okay.
Yeah, good question. I will say this. If you look at my hit rate in the state of Ohio, I break it down 2 ways. I break it down by agencies that have comparative rater and agencies that use Diamond to generate their quotes. It's about a 60% split for agencies that use a comparative rater system of some sort of in some sort of fashion versus 40% of the agencies that quote directly in the system. My overall hit rate in the state of Ohio is about 18.5%. So the quotes that are coming in versus the quotes that are being issued is about 18.5. If you look at the agencies that just go the route directly into Diamond, it's about 35% that we write. And there's a lot to be said about that. A lot of agencies that have a lot of tenure with us, they know our appetite, they know what fits. If you look at the comparative rater, it's gotten better. It's about 7.5%. It used to be about 2.5%. So if you do see that, whenever you're quoting us and using the comparative rater function, PL Rater is I think what you guys use, take us to the end. Give us a shot. If you know it's a good, clean account, we might not look the most attractive right in the comparative rater, but by the time you go in and you doctor up everybody else's quote, typically speaking, we're more in line. So just one of those things I wanted to throw out there because I know you guys are very competitive rater driven, which is great, but just wanted you guys to be mindful of that because there are instances where by the time it's all said and done, we might have been a little bit more in the ballpark. Our goal, admittedly, though, is not to be the least expensive. We've got coverages and services that we provide that are second to none, and so we want to be adequately priced for that as well. All right. So I think I've got the policy that I want to quote. I've got it up here. We will go ahead and get this started. So an account like this that Nick sent over, if I was a veteran person entering this information in the system, they could do this home and auto quote in probably about 4.5 minutes. No joke. I'm going to take my time with you guys today and make sure that we do it the right way. So going to go over here on the left-hand side. We're going to go down to where it says new quote. We're going to be quoting a new client. Now, if we were adding a line of business to an existing client, we could do it this way, or we could pull them up in the system and click on add new line of business. But this is a new client. So we're going to have to build their client profile just one time. We don't have to do this multiple times, thank God. Once we do it the first time, we don't have to do it anymore. So bear with me while I do a little bit of manual labor here. Give me 1 second. And in order to generate a quote as well, you really only have to have a few key pieces of information, including their name, their date of birth, and their address. Diamond does a lot of pre-fill, but if you have that information, especially the driver's license number, I highly recommend that you enter it. That way, you're getting the very best, most accurate reports that are run behind the scenes. I don't know if it gave an occupation for her. I'm going to say that she is retired. So as you can see, just the stuff with the asterisks here is what you'd have to enter in order to move on from the screen to screen. If you had the second named insured over here, you'd enter their information. This is just a one-person policy. You can see some stuff over here too. If they're high profile, they're VIP, meaning anybody that works at the agency. or if they had something through our CSU division, we want to mark that there too. When I click continue, Diamond's going to ask me for this insured's address. Now this is the mailing address of the insured. It could be different than the property address, but chances are 9 times out of 10, it's simply going to be the same. Just click verify down here, and it'll verify the address for us and fill everything else that we need. Go ahead and click continue. And on the next screen, what Diamond's going to ask us, it's going to say, okay, what lines of business do you want to quote? Now, if you watch, when I click the home and I click the auto, the umbrella is going to mark itself automatically. Don't uncheck that because it just quotes the umbrella for you. It pre-fills all the information. That way you don't have to enter it again. If you do sometime down the road want to enter or quote an umbrella, you can just go in and update the effective date. So the first line of business, whenever we quote this way, is always going to be the home. You're going to notice that Diamond defaulted my effective date 10 days into the future. I'm going to leave that here because this is a, actually, no, I'm going to change that because this is a midterm. So she goes to 320. Your agency code is going to automatically default. I've got the magic powers here, so I have access to everybody. And what you're going to notice too, for a little bit, is it takes some time for your producer work to get implemented into the system. So don't be scared here. It does take some time. It's not on our end. It's some of the third parties that we contract with to do background checks. Enter the prior carrier. I don't even know. And on the next screen, what Diamond's going to do now is it's going to ask us what kind of home are we quoting. Remember, I told you can quote homes, you can quote condos, you can quote tenants with us. This is a home that we're quoting, so I'm going to select home. It is the same address that she had for the mailing that we entered, and there is one driver. Now, if in the last 6 months or so this insured just purchased this home, we'd want to put the prior address down here and the purchase date because there's a credit that's applied for the new home purchase. And if she's just moved, this will be an extra way to verify some of her reporting as well. When you're quoting through the comparative rater, obviously it's giving you that indicative quote. This is actually going through the motions, and I know chances are, you're not going to be doing this on a daily basis, but I do find value in it. That way you can kind of see how the system works and how you can navigate it. And if you notice up top here, most companies have tabs, whether they're down at the bottom or on the side, or ours are at the top. What we're doing is we're literally just working through these tabs, right? And we're going to get to the summary tab, which will give us our rate. Now, with this particular home, it's going.
It froze again, Scott.
Yeah, it's
No sound.
Can you hear me now?
Yeah.
Yes.
Cool. Gotcha. So this is going to be on our executive form. If you look at the quality grade here, this is what we mean by standard. This is what we mean by upgraded. About 90% of the homes in Ohio are upgraded. This is a semi-custom home. This is a custom home, an ultra custom home, and this is the home Brad just moved into. I don't know if he's on the call, but I always say that I live in that house.
That doesn't look like my condo.
It doesn't look like your condo?
That doesn't look like the condo I'm in, but I will trade you for it.
I wouldn't want to, and I say cleaning fee because I wouldn't clean that house. I'd have to hire somebody to do it. But just note, you do want to select the quality grade whenever you're going for the fully underwritten quote here, because This is going to come into play on the next screen, and I'll get into that. But it is the primary residence. It's not rented. It's occupied. It's not under construction. It's a dwelling, not a townhouse or a row house. Single family home. Yes, we will write multifamily homes on our homeowner policy. It geocoded the risk, so we know the protection class. We know the fire district name, how far away it is from the fire department. The year of construction on this one did pull 1931, which is what the app indicates too. I'm going to put that it's not on a historical registry. It didn't look like it was when I pulled it up online yesterday. The application that was sent over to me indicates it's the original roof. It doesn't look to be, but I don't know the roof year, so I'm going to leave this as is. Gable roof, composition shingle. A lot of this just goes in and pre-fills making assumptions, right? One thing to keep in mind is it is indicating, so it's pulled information and it's saying, you know, based upon public records, this insured does have a fully finished basement. You do want to make sure that you fill this out just to double check your ITV. So a guesstimate on this, because it's a 2,300 square foot home, I would say the basement is probably roughly 800 square feet based upon what I saw online. Detached garage, it's got one car. If you have porches, decks, etc., you'd add them here. And if the insured does have a mortgagee, you don't have to enter the mortgagee information, but it does affect the rate, because if you're paying annually and you've got a mortgagee, you're not going to get a credit. But if you're paying annually and you do not have a mortgagee, you would get a credit. And I don't see one on here, so I'm going to leave that as 0. And when I click continue on the next screen, what Diamond's going to do is it's going to ask us, it's going to say, okay, what dwelling limit do you want? And if you remember correctly, right, we have on our executive homeowner form, this is good for any policies less than 750K. With AAA, it looks like this one's right at $400 or $367,000. If I had to guess, Diamond is going to tell me that it's not enough because it's an older home. And I'm not saying that this is right or not, but with this being an older home, Diamond is indicating that it should be roughly $529,000. You have two options here. You can complete an actual, you can complete your replacement cost estimate outside the screen here using E2 value. You can accept the system generated, or you can just continue quoting, knowing that you might have an increase in coverage if you do issue this. For today's purposes, because I just want to show you the system, I'm just going to select continue quoting. On this one, since it is a home built in 1931, I would say that it's probably more in line with in the 450 range if I had to guess. I'm not saying that AAA is wrong in this. I'm just saying like what I typically see. You'd also have the ability to get what's called a starting point estimate by reaching out to your risk management specialist if you wanted to avoid any type of bait and switch. Looks like they've got 70% for coverage A down here for their personal property. Remember the actual loss sustained for loss of use. I'll leave this information up here. They've got a flat deductible. In Ohio, we do not mandate any kind of windstorm or hail deductible. This is an older roof, so it would be subject to the payment schedule. So it would take the replacement cost of the roof and it would give them 50% of it. If it was a newer roof within the last 15 years, it would be replacement cost based. So keep that in mind too. If this was a larger home, meaning a home over $500,000, you'd want to put the inspection contact info in here, probably the named insured, but sometimes that could be different. When I click continue here, it's going to take us to the optional coverages. And so typically whenever I'm training an agency, I quiz everybody right here, but I think there's a lot of folks on the line. So I will give you guys all passing marks, but remember back to the products and philosophy, whenever we're talking about the most used executive endorsements, we want to select those here. So when I select Homeowner Plus, this is going to gray out because this is an included coverage in Homeowner Plus. If I wanted Quake, I could add it right here. This one does not have earthquake. This one doesn't have, I can't tell if it has much of anything because of the way the app reads. Looks like it's an HO3, doesn't appear to have any endorsements on it. So I'm going to quote this how it should be quoted in my opinion. So I'm going to give her some enhanced replacement cost, at least $10,000 of water backup, identity theft, service line coverage, and I'll call it a day there. If I wanted to add any kind of personal articles floater, I would add that here by selecting this button, filling out the number of stuff that I had, and then on the next screen, I'd be able to enter that information. You'll notice down here, I know you guys have a footprint that's pretty wide in the state of Ohio. I can do gentlemen's farms. If you've got anything bigger than that, probably better suited elsewhere, simply due to the fact that our coverage form isn't that great on farms. Next up, what's going to happen is it's going to run a clue report, which it did, and it ran the NCF. And I forget who had the question earlier, but they were curious. Maybe it was David, curious of, if you guys were going to be able to see what their score was. So this insured has the best insurance score. If you wanted to actually see her credit score or her insurance score, you could. The NCF is just right here. You can view it. You can pull it up and it will show you the 4 major hits on her report. She only has 2, which means she's got a good score. There are no claims on the clue report, which is good to see. Had there been, they would have all been up here for you too. So you wouldn't have had to pull up the clue report. You would have had those right there. We'll give her the auto because we're going to quote her auto. It doesn't look like she has any mitigation or protective features. But if you had questions over what a secured community was, all you do is just hover over it and it'll tell you, what the requirement is for the credit itself. She's getting the best rate because she's getting quoted that many days in advance. And I'm trying to find. I can't, yeah, there's some codes on here I'm trying to determine, but it looks like I'm going to leave her on annual pay. And when I click continue, what Diamond's doing now is it's going through and it's rating the policy. It's taken all the information we entered through all these tabs and it's going to populate on the summary screen. So for example, right now, this insured is paying with AAA about $975 for her auto or for home on an annual basis. And my rate with better coverage is $828. And the reason why is because of that insurance score. She's got the best score out there. So it's very attractive to us. And plus it's a packaged account. So that's the home. What we're going to do next is we're going to scroll down and we're going to click next quote. We're going to enter the auto, and the auto goes a lot quicker because we use a lot of pre-fill with the auto.
Hey, Scott, how long does it take for that early shopping discount to fall off? Is it like 3% increments a year?
It's 1% a year.
Thank you.
Yeah, to be honest with you, I hate that credit. I wish the industry would have never come up with it. I mean, everybody uses it now, and we were really on the fence as to whether or not we were going to, and we kind of had to in order to keep up with the industry. You'll notice that I don't have to enter any other information. You guys, you'll have your agency code will default. Mine's different, but all of this will default to the home, same effective date, etc. If you needed to change it, you could. What Diamond's going to do now is it's going to pull Gene's information from our prior from when we entered it prior. It's going to it even pulled her social security number. I don't know her true. I think she's just single. So down here, had we had another driver that we needed to add, all we do is just click this add driver button, enter their information, make sure that we fill out at least all of the red asterisks, and then move forward. If we needed to add more people, we could go that route too.
Will it pull in other driver's license number, bridging from PL Rater, or normally just the first named insured?
It'll pull anybody that's registered to that address.
Good.
Whether or not they live there, Justin, or not.
Okay.
So you got to be mindful of that. And if you see like maybe Jean has a middle initial that she uses, right? So it might populate her a second time. You'll need to delete one of those, and it'll ask you if she's still in the household. She is, but you're getting rate for her already, if that makes sense. So you just say no. So it pulled her car. It does indicate on the screen here that she's got a 2014 Toyota Prius. If I wanted to add that Capstone Auto endorsement, I would select the box here. It would ask me in certain situations what kind of trim package she had to make sure that the agreed value is accurate. I'm just going to cancel this. If I didn't want the agreed value loss settlement, all I need to do down here is just select symbol, and it'll still give me all the bells and whistles of the Capstone Auto, but it'll give me the it'll give me the ACV loss settlement instead. Now you're going to notice too, other companies that have their usage factors. I only have a couple options. I've got farm, business, and other. 99.9% of what you write is just going to be other. We base it off of the information that's inputted here. Additionally, you don't have to toggle with any of this information down here. And if you needed to change the garaging address, as long as it's garaged in the state of Ohio, you'd have the ability to go in and do it that way too. If you needed to add an additional vehicle, meaning a private passenger vehicle, you would select this button. You'd literally just type in the VIN, copy paste the VIN, click lookup, and that's all you need to do. The vehicle information will pre-fill for you. I'm going to delete the Capstone Auto here.
So the motorcycle is endorsed on the auto. It's not a separate policy.
It's not a separate policy. So that's what we're going to go to next. So if you think back to that screen, if it's got wheels and we're willing to write it, it goes on our auto policy. So that includes motorcycles. It includes exhibition autos, so collector cars. It includes other vehicle types like ATVs, golf carts, motorhomes. You can add all of that right to our auto policy. If I needed to add a motorcycle, I select add motorcycle, type in the VIN if it's got one, put in if it does, we can type in the year, the make, the model. Just make sure you got the current market value. Down here, you want to make sure that you give it a 6-month layup credit. Type in the months. Remember, they still have that sunny day clause. If they don't have to call you to take their bike out if they want to every once in a while during their layup time. Not a problem in the least bit. But that's how you add a motorcycle. It's simple. It's easy. If I wanted to add an exhibition auto, I could do it this way. Same thing. A little bit less information that we need because we don't offer any type of layup credit. And lastly, if I wanted to add any other type of vehicle to the auto policy, I would add the VIN if it's got one. Most of these don't. And down here, you can see all the body styles that we have. You're going to get liability for any kind of trailer that's being towed by the insured. But if they want physical damage coverage for that trailer, they would add it to the auto policy.
Hey, Scott, I have a question. Can you apply a layup credit on a auto? Because I have a lot of customers that they have like convertible Mercedes, like 20 years old. They want to lay it up for 6 months. I had a guy that has a Corvette. He belongs to a Corvette club. He lays up his autos about 7 months. So is there any application for that?
You can take a vehicle down to comp only in the state of Ohio. There's a form that you have to fill out. I don't really like that. You can do it. Don't get me wrong. We are filed to allow agents to do it, but if they take that vehicle out and they drive it and something happens to it from a liability or collision perspective, there's no coverage. So if you do have somebody that's got one of those types of cars, I recommend that you just use the exhibition auto rate.
Okay.
Because it gives you that agreed value loss settlement, and it takes into consideration, plus it's very inexpensive. It takes into consideration the fact that they're only driving at maybe 4,000 miles a year.
Exactly. Okay, then.
Yeah.
Sounds good.
Good question, though.
Hey, Scott,
go ahead.
Sorry to interrupt.
You're good.
Losses with like an all-terrain vehicle, fact, multiple losses with drivers on the policy. If there's an underwriting problem with having, 2 or more, or 3 or more, if you have an ATV accident or a dirt bike theft, how does all this figure into the equation on whether or not it's going to be an eligible risk?
I don't think that's going to come up too often. But if you do have an ATV loss or a dirt bike loss, especially if it's like a youthful driver or something along those lines, I would be more concerned about what they're using the ATV for and the motorcycle or the dirt bike. But you'd have to run that stuff by Tim, to be honest with you. If it shows up on the clue report, that means that it would have had to have been number one insured. And, we could theoretically surcharge for it if we were comfortable taking on the risk.
Okay.
I know that's kind of a roundabout way to answer that, but I've never seen an ATV loss on a clue report, to be honest with you. Have you seen one of those before?
I have a friend. He had a couple ATVs up in New York. They were in an accident together. High value clients, and this was many years ago. But I'm just thinking, I think Cincinnati could be a great product for him. But in the past, how it would just thinking out to the future, how some of these scenarios might interact.
Yeah, I mean, the good news is we can take a look at anything. You can always have that follow-up conversation with Tim. But yeah, I've never, I've had ATV losses, don't get me wrong, but I've just never seen one come through as new business and coded that way on the, I guess whenever I said earlier that I think I've seen it all, I guess I haven't. Any other questions?
Surprise, Scott, Mike Kelly. 2 questions. 9 times out of 10, our PO rater pulls in the insured social security number for the primary insured. Is there a benefit to having the social to the eventual rate or not having a social in their system? Social security number.
You don't have to have the social security number to get a rate, Michael. If you've got the driver's license number, that's good to have, but even just the date of birth and the address and spelling the insured's name correctly, we're usually able to pull everything with our third parties and pre-fill.
Wonderful. The other question pertains to homeowner endorsements. As you were doing the home quote, you clicked identity theft, for example. And is this kind of an a la carte, or do you have endorsement packages that include, let's say, replacement cost, expanded replacement cost, water backup, let's say 5,000 minimum? Do you have, can you select an endorsement package that includes all that, or you have to do a la carte?
So with the executive, it's more a la carte. With the executive capstone, it's all included. There's no endorsement. It's just part of the form. So you don't have to choose everything. The homeowner plus endorsement that I selected does give you replacement cost on contents. It gives you a large loss deductible waiver that's built into it too, refrigerated property coverage, and it's it's very inexpensive, but that's the only kind of bundling endorsement that we offer on the middle market product. Good question.
Sounds good. Thanks.
This particular insured, just so you guys know, we are more competitively priced for some odd reason on split limits. You can choose combined single if you want. She does have 100, 300, 100, and I will go ahead and just make sure that she has an apples to apples quote here. She does have the matching UM/UIM. Make sure I amend that. And I don't see where she doesn't have, it looks like, any additional coverages here. So I'm going to go ahead and leave the personal auto plus off, and I'll click continue. And on the next screen, it's going to ask me for the vehicle coverages. And she's got a $250 comp deductible and a $500 regular deductible. Please note the lowest deductible that I have to offer is $250. Typically speaking, everybody these days has at least 500. If you do keep a 500 comp, 500 collision deductible on your auto, and you have a $1,000 deductible on your home, and there is a loss, we're only going to charge you basically one deductible. So if you've got multiple vehicles that are damaged in a tornado, you'd only have to pay that $1,000 and not several $500 deductibles. So just one thing to keep in mind. I did mention, I think, I'm not sure who it was that asked the question earlier about comp only, but here's where you would take that vehicle down to comp only right here, and it would generate the form that you'd need to sign. If you wanted additional roadside assistance, you could pick it here. She has some additional towing and labor, or I'm sorry, transportation expense. So I will give her what she has currently. If she needed gap coverage, you'd select that right here. And remember, this is the one that I advised you guys to kind of stay away from. This vehicle wouldn't qualify for it anyway, but limited in scope, super expensive, and really just kind of not worth it.
Hey, Scott, any forms that we have to send back to underwriting, or sometimes, most of the carriers, we retain applications on file with our agency, but there are some forms that the carriers require us to send back to them. Would like that garage coverage form, would that be a form that we would have to send back to underwriting?
So if you take a vehicle to comp only, or if for some odd reason, which we wouldn't even allow it, you exclude the uninsured, underinsured motorist coverage on your auto, or you choose a limit that's lower, those are the two forms that Tim would ask you to sign and fill out. But the rest of it, you're just going to retain every bit of it. We won't haggle you for applications or anything like that.
For that form like that, he would want us to send him the signed form?
Yeah, for the comp only. It doesn't come up that often, but it is a signature form that he would request. That'd be about it. That's about the only thing I can think of that he would actually request.
Okay.
I think you'd be the only carrier that we have, Scott, that requires that. I think none of our other carriers will require that, just so you know.
The comp only?
Yeah, let's say I've got a client who's existing, they've got a vehicle they're not going to be using for a while, it's not working for some reason. We can just simply go into that carrier system and just put OTC only without having to have them sign anything. But we'll obviously know at our records on the AMS that they require that, but nothing they need to sign. So just simply change it.
It's been so long since I've had somebody do that I might be speaking out of line too. That would be about the only form I could think of that anybody would ever request, and I can't think of the last time I've had somebody ask me. I'll reach out to an underwriter and see if I can get an answer for us. But yeah, that's good feedback, Michael. If nobody else is requiring it, I don't even know if it triggers a flag anymore in the system for the underwriter to go in and get it. But yeah, good questions. So this does run a clue report. It did run the prior carrier. It does indicate that she has a claim from, it looks like 2019. And I'll check the clue report just to make sure that it is accurate. So it looks like she was the driver policyholder and the driver, and roughly 20K paid out. We do not run MVRs until you hit the issue button. I can run one now.
When you say that, and it doesn't run it until you hit the issue button, does that actually issue it, or that just runs the report?
It runs the report, and if there's no claim, if there are no hits on the MVR, it'll issue it. If you know the history, if you know her MVR, like what's on her MVR, you have the ability up here to actually add a violation. If you know she has a speed, you can generically add a violation in there to get the rate. Or if you got an account that's pending, you can actually ask Tim to run it for you. But this is one way we keep our expenses really low. We were running MVRs on everything, and we we want to make sure that we are running it on the business instead of just stuff that's just 100% just in the system, and no chance of really winning it. But you do have the ability to go in and add a violation. So if you knew that she had a speed from last year, you could go in and add it here, and it'll give you an accurate rate.
So if you hit issue to run it and nothing comes back, then that policy's then bound, correct?
Yep, it is.
I think Nationwide does that as well. If I'm not mistaken, it's been a while since I did one of those, where they will actually want you to run it up on, let's say if you hit it too many times, it'll actually issue the policy, but you really don't, you want to just get a rate. Now, question for you, Scott. Does Cincinnati pass on MVR charges to the agency? How do you all handle that?
No, we pay the MVRs. That's why we don't pass them on to the agency. I know other carriers allow you guys to run reports as much as you want, as long as you're issuing the business. They won't charge them back to you, but nope, we do not charge them back at all. It is built into the expense ratio, so it's built into our profit sharing, etc., but it's not broken down to each individual account.
Excellent.
I have a question.
Oh, go ahead.
If you put in the violations yourself, and then you go to the point to where you're going to go ahead and run the reports to issue it, will it go ahead and only charge once?
So it will not. That's a good point, Deborah. It won't let you issue the policy. So if you enter a speed on here yourself from last year and you go to issue the policy and you forget to delete that speed, it'll give you a flag and it'll tell you you've got a hit on the MVR. So you'll need to go in, and all you do at that point in time is literally just delete the speed that you entered, hit the summary button, and you'll be able to issue the policy.
Okay, perfect. Thank you.
It won't double charge them by, if you enter something manually, it won't just allow you to issue the policy without running that MVR and having it be actually correct with what the report says.
Okay, so we just then go back and delete what we put in and just let the MVR pulled.
Yep,
stay.
Exactly.
Okay, thank you.
So if you put in January 1st and hit issue, it runs a report and pulls back that it was January 5th, then it's going to give you the ability to delete the one that you put in, so it doesn't.
Yeah.
Okay.
Exactly.
All right. Many of our carriers are doing hard surcharges after 5 years, not Progressive being one of them. They used to be as 3 years and done, but now it's up to 5 years. How does Cincinnati do surcharging for, let's say, at-fault accidents or even not-at-fault accidents, things like that? Or I know MVR is 3 years, but typically the not-at-faults, the at-faults, not 3 years to 5 years.
Yeah, so it's a great question, and there are about 90,000 rating variables in our auto algorithm with this particular company, the Cincinnati Casualty Company. And what we're going to do is we're going to have a 3-year look back essentially for all minor violations as far as surcharges go and at-fault accidents. But then there's a 5-year look back essentially for basically anything that could claim-wise occur on an account. And so we're not surcharging for that 4th and 5th year, but what we are doing is putting it in what's called this incident count here. And it's a different bucket, and it affects the actual credits the insured would have had they been claims free for 5 years.
Very good. Thank you. That's good.
Yeah, it's a very it's a different way of rating everything, and what it does is it allows us to be very competitively priced essentially on the stuff that we really want to write. All right. So if you remember back, I told you guys that you might have it might qualify for the interagency discount. This is inside the agency, and it does look like it's going to qualify. Sometimes once it sees that there's an at-fault accident, it'll take it off, but I'll apply that here because it is an account that we're remarketing from AAA over to Cincinnati. If you wanted to sign up for RideWell, here's how you would do that. All you do is just literally click the button, and the insured would be notified that you've signed them up for RideWell, and she'd get instructions on how to do that because you'd have to enter her contact information. I'm going to leave that off, but I'm going to click continue. Then on the next screen, it's going to ask me for the billing information, and it looks like I can't tell if this is. It just says billed other, so I'm going to leave it at quarterly pay just to be on the safe side. It is a 6-month policy that she has with AAA, and note you can do 6-month policies with us, but I wouldn't do that. I would just make sure that you use the annual pay. If you do need to short term something, you can. Click continue here. So right now she's paying about, looks like 381 times 2, 762, so I'm about $120 over, but I think on the overall package I would be pretty competitively priced on this one. And you'll note it does meet our guidelines. There's no flags or anything like that. We did work our way through these tabs here. So if you expand this out, we're on the summary screen. It'll expand all of the coverages that we went through. And if I needed to do any kind of changes, like if I wanted to add a vehicle or anything like that, I can add the vehicle down here, or I can scroll up and I can just go back to the vehicle screen and add the vehicle there, make my change, and then all I have to do is just click summary instead of going through the continue buttons, and it'll rate the policy for me.
Scott, does it save vehicles? Like maybe you have a customer that's potentially buying a vehicle and they have the VIN number for it and they just want it rated to see what the price would be now. Does it save that information, or will you have to go back in and re-enter it?
Yeah, so if you got an insured that's already with us and you want to give them a quote for adding a vehicle of any type, you can go in and do an endorsement to that policy and just not issue that endorsement until they're ready for you to issue the endorsement. And the endorsement will stay in there for, I do believe, like 90 days.
Perfect.
I got a quick question, Scott. When you said how it pulled through, she had a 6-month policy with AAA, and it was pulling through some of the coverage, like you were mentioning the deductibles. Is it accurately pulling that through, or is it just defaulting and assuming that?
So the prior carrier information, the only information that we're going to pull as far as her prior coverages go is who the prior carrier was and what her limits were. As far as the deductible amounts go, that's just my defaults in the system.
Oh.
I have a on one of my screens pulled up. Nick sent me over in a Cord app that I've got, or not in the Cord app, some information from her from in the policy or in the agency management system that he pulled for me, so I was able to see that.
Okay, yeah, I figured that was it, but some of the other companies now are pulling through a little bit more robust information, but no, it's standard, just their prior limits and length.
Prior
of
limits,
time,
it'll pull the vehicles that are registered to the home and everything along those lines, but no, it doesn't pull the deductibles, just the it'll let me know what the limits were, and it'll still go with whatever I have defaulted for the liability limits, though, the BI limits.
Can you quickly show us where, if it doesn't pull in the prior, where we would edit that and put that in?
So we would go to credits and debits right here. And if you scroll down where the prior carrier name is, you would just enter it right here. So you'd have to select what their limits were, and there's just a few options and how many prior carriers she's had.
For what period of time is that?
So with this, it's going to use a 3-year look back. So if she's a shopper, if we inputted here that she's had 4 prior carriers, it would give me a different rate.
Thank you.
Yeah. So there's one last thing I want to show you. Actually, two things I want to show you. Up here, whenever you're on the summary screen on the auto, you can click this pay plan options button. And what Diamond will do right now, it takes it just a second, but it'll generate all the premiums for the other payment plans. So I've got this on quarterly pay. If we went to annual or semi-annual, it would take the premium to $862. So not too much savings, about $19. You wouldn't get any credit for the monthly EFT, but this way you don't have to go back through to the billing screen and re-rate. You can just go to this pay plan option screen, and it'll illustrate all of the different premiums for the different pay plans. It's the same thing if you wanted to provide some deductible options too. And down here at the bottom of any one of the quotes that we're on with this particular client, you can see up top, if I want to go back to her home, if I want to remain on the auto, if I want to go to the billing screen, all of it's right up here at your fingertips. You'll note the home quote, every quote's going to start with the letter Q. The home's going to be QH, the auto is going to be QA. The policies, whenever you issue them, the home will start with an H, the auto will start with an A, the umbrella will start with U, and you'll have either A01, H01, U01, and the last 7 digits will be the same for your entire client. So keep that in mind as well. If I scroll down and I click policy and proposal options and I go to continue to proposal, what Diamond's going to do is it's going to generate a sales proposal for me. It's going to pull all the information. It's going to pull it all together in a PDF that I can easily communicate to the client. This does take just a little bit of time to get going. And once it does, it takes us out to a different website to build it out. I did want to share this with you guys so you could see. Click generate proposal here. So Diamond's going to pull the home, it's going to pull the auto info. Once you guys have your agency logo uploaded into the system as well, you'll be able to embed that in the sales proposal too. If you had a photo of the home or your own letter that you wanted to include in the sales proposal, you'll be able to do that too. So this is the sales proposal. This is how we're going to build it. It's got the insured name. If we needed to add any additional information like the agent specific to it, we could. I'll click continue down here. If I wanted to upload an agency logo, once you upload it for your agency code, it's going to be available for all the users. If you have a photo, you're able to add that here. If you got your own proposal letter, you can add that there too. I like to print these one policy per page. It makes it look a little nicer. If I was waiting on additional information, I could type some notes in here that we could embed in the proposal system as well. You can add some marketing material about Cincinnati if you would like. You can talk about the, now this is just some verbiage that gets embedded, so you can expand it to kind of see. So we quoted her on the executive homeowner form, and we gave her that limited water damage. So I'll include both of those so you guys can see them. Click next. And this will allow me to add some actual marketing slicks. I'll choose the service line just so you guys can see an example. And then down here at the bottom, I'll just click generate proposal. It's going to download the PDF for me. And this is how it looks. If you had your agency logo, it would be on this front cover as well. If you had a photo of the home, it would be too. the insured's name, a little bit about Cincinnati and what we do, a breakdown of all the homeowner coverages that we quoted, including the deductible, the dwelling limit, all the additional coverages that we quoted, a little bit of verbiage about some mitigation features, protecting your home with the executive policy itself, the limited water coverage, a breakdown of the auto, the coverages themselves. If we had additional vehicles, they would be listed here. All the premiums associated with the different pay plans, and then a summary at the very end of the for the total package premium. A little bit of information about the mobile app, and lastly, the service line coverage. So this is a PDF that you can download. You can customize it as you see fit. We're actually going to hopefully take this into a digital space here within the next probably year or so. But when you do this, use the sales proposal, the hit rate does go up. You know, you can obviously you can include links to you know, some of the other marketing materials. I'll send you guys as well. But did want you guys to see what the sales proposal looked like, so you could have that as well.
Hey, Scott, do you find that the system works better, and it looks like you were working out of Chrome? Do you think that it works better in one browser than another browser?
Do not use Internet Explorer.
Yeah.
Use
How about Edge?
Use Chrome or Edge. Yeah.
Okay.
Good call.
One other thing, we have a lot of account managers or our customer service team. So what's it look like if a customer calls in? They're just the customer. I saw on the search there, if you pull back up the main homepage, that there's something to put the policy number in. But obviously, the agent may not have that. I mean, I guess they could look into our CRM. But are there any other ways for the account manager to find that policy other than the policy number?
Yeah, so easy. So you would type in the just type in the last name and the first name, and this is my policy. So you like it's easy. You can expand it if you wanted to go down to just one of the lines of business. So if I wanted to look at my auto policy, for example, I would go to the image that's in force, or the policy that's in force, and it would pull up the auto policy right then and there. If don't pay any attention to this stuff, it's sticky notes that drive me absolutely nuts. But you can see on, this is the summary screen that I told you guys that we were on before, right? So if I needed to do any type of endorsement, like I wanted to add a vehicle or anything like that, over here on the left-hand side, all I would need to do is pull up the policy, right? Use the lookup feature, type in the last name, go down here, click endorsement. Make sure I have my effective date right. It's going to pre-fill all of this. It's an endorsement. We'll make it effective today. Whatever you write in these remarks shows up on the deck page. So be careful. Don't call anybody bad names or anything like that, because I say that because it has happened. Adding new Jeep. I don't know. Hit enter. Diamond's going to pull up a pending image for us in the auto policy. I can literally go right down here to where